What is up, guys? I think we are live. At least we should be live. So today is June 9th, is Monday. And we got some really awesome stuff happening for Bitcoin. Haven't done a live stream in a really, really long time. It's been forever, guys. So I'm going to be rusty, probably. I mean, it'll be fine, but I used to stream all the time. A lot of my longtime viewers know that I really got started streaming, but then I sort of switched to videos for quite a long time, and I figured, you know, if we're going to be breaking this all-time high here, if this is really happening now, which it looks like it is, then I better start streaming, because it's going to be a really epic next few months if we do get this breakout. Because, guys, we are still following the parabolic trend to this day. To this day, guys, we've been talking about this for like a couple of years. Let me know in the chat if you guys can hear me, if everything's good with the audio. Again, I haven't streamed in a while, so I just want to make sure everything's cool. Let me go ahead and share this in the Discord. They're already in the chat saying like, "What? Kevin's live?" That's right, guys. We're live once again. It's been a while. I need to reconfigure my live stream setup, but for now, this will do. What's up? So, we're seeing a lot of familiar faces in the chat, and a lot of new people, actually. Audio is all good. Okay, cool. So, yeah, I mean, guys, we're following this parabolic trend really, really closely. Let me just really quickly tweet out the live stream link. No description, just going to tweet out the link. So anyway, yeah, this is going to be, there's a lot of reasons for me to think that the next many months moving into October are probably going to be quite bullish. And we're going to go over that in this stream. I was going to post a video today, but had some trouble with the software, and I said, you know what, it's getting late, let me just go live, and we'll do it this way. Because if the market's going to be bullish, we're going to be going live a lot more. So what's up, guys? Make sure you smash the like button while you're entering the stream. So obviously, for the past couple of years, we've been talking about the parabolic trend. I stopped talking about it the past like month or couple months because people were actually getting upset that I kept saying the word parabola, and it was a little repetitive in terms of content. But if you look, we're perfectly in line with this, guys, and we're ready for the next push towards the quote-unquote sell point, right? According to the textbook diagram, the sell point. Now, a lot of people get upset when I say that or whatever, but this is just what it is, right? And this next major push could last until October, according to previous cycles. So if we look at, let me just take this down real quick and push over the parabolic diagram chart. Just look at Bitcoin like this. So this parabolic trend line stems back to the FTX collapse. And, you know, a lot of people, when they look at this diagram and they try to line it up, oftentimes I see people kind of like cheating it, and they try to make it so that base 3 is like up here or something. Like they try to make it basically the biggest parabola as possible. But the one key characteristic that we got to remember is that the parabolic trend bases, like base 1, base 2, base 3, base 4, these are all defined by a touch off the trend line, a touch off the parabolic trend line. That's what the textbook diagram is showing, a touch off the trend line. So if we look now, you can see, well, let's just like get the full map, I guess, now that we're here and we're live. Definitely smash the like button, guys. Base 1 is where your trend, your parabola stems from. So type base 1, the beginning of the parabola, right? You can't cheat that. That's where it's just the start. It's wherever you start it from. And it clearly starts here. Now, the next time that the price touches the parabolic trend line is right here. And that means that that's base 2. You can't cheat it. You can't say, no, well, I don't want that to be base 2. But it touched it, guys. So that is base 2. And the next time it happens is this long consolidation from last year, right? And so that is base 3. Each touch off the trend line, that's base 3. And so we just got another, no, we actually had a fake out, like a wick, like less than a week below the parabolic trend line. And that was, you know, a little bit worrisome at the time, but we pretty much just closed, bounced right back. Didn't really, it was a slight fake out, not a big deal. That is base 4, right? That touch off the parabolic trend line is base 4. Someone said low volume level. Is that my microphone that is low volume? Let me really quick. I'm assuming, if it's my mic, then I can really quickly adjust that. Sorry guys, I'm a bit rusty with the live streams. I haven't done it in quite a while, but that might help right there. I'm assuming that probably bumped it up a little bit at least. Let me know if that works out for you. Yeah, I mean, there's music in the background too, but I don't want that to be like blasting. Anyway, not to interrupt what I was saying, base 4. All right, so each touch off the trend line. Now that we've properly identified each base as a touch off the trend line, right? Each little base is like its own, it's kind of like cycle to touch the trend line. And then we take the diagram and we bring it back. Right, you try to line it up. So try to get this right. Something like that, right? So the next phase is the vertical phase, where you go, you know, into a potential blow off top, right? I mean, a parabola is simply just an exponential trend, and it gets steeper and steeper. And because of that, by definition, the parabolic trend, it's unsustainable, right? These are not sustainable. By definition, in the definition, it's unsustainable. But it's sort of a trade-off. It gets really, really bullish, and because of that, it's unsustainable. Eventually, the trend gives out. Just like Bitcoin in 2017, 2021, eventually the trend will shift back to the, we all know that, right? I mean, I'm not surprising anyone there. But this next push could be until October, and there's a lot of reasons why I think that. There's a lot of, you know, multiple reasons, and one of them is, you know, you guys are familiar with the halving cycle profit model. The halving cycle profit model is something that I created. And one of the most important things that this model shows is that the 80th week after the halving is usually the cycle top. So if we look, 2017, or I'll just put it on log scale, 80 weeks. Well, I mean, we kind of have to go to, I guess, Bitstamp chart, long-term chart. Now, we had a Mt. Gox situation back in 2013, which caused an early top. But you can see that 80 weeks after that halving was a lower high, and we had a huge bear market right after that. 2016, 80 weeks later, it was the top, right? We hit the top, and then bear market. 2021, halving. 2020, 80 weeks later, almost the exact top. So it's just pointing out that on average, 80 weeks after the halving, you got to be out of the market because you're probably going to have a devastating bear. It's happened every time so far. And we're coming into the halfway point of this halving cycle profit zone. And it ends over here in October. And the parabola, as I was showing before, kind of lines up with October, right? The trajectory takes us right into that point. And it's not only that, it's not just the parabola or the halving cycle profit. There's actually more things that line up with it. And this is the global M2 money supply. And I'm sure a lot of you guys have heard this one. When you offset it to the right, so if you go to the daily chart and the global M2 money supply, and I've found, or actually I discovered today in my morning voice chat in my Discord, that 99-day offset for the global M2 seems to be the most optimal throughout all of Bitcoin history, really. If you go back to 2017 with the global M2 with a 99-day offset, now it doesn't, at first it's not obvious, but essentially Bitcoin and the stock market both became very unstable at this point. When the money supply hit this peak and came down, Bitcoin topped before the stock market. The S&P followed this, right? But Bitcoin is a more risky asset. So for whatever reason, it didn't follow this next push after it peaked for the cycle. But it lines up really well with that peak on the M2 money supply with a 99-day offset to the right. And just to really quickly explain, the M2 money supply, it's currently growing. And markets tend to follow this, but it's not immediate. When money enters the system, it's kind of like pouring a bucket of water into a lake, and the waves ripple out, and it takes a while for it to hit the shoreline. It doesn't immediately hit the shoreline. It takes a while for the waves to get to the shore. And the same thing goes for the global money supply and markets. Money supply grows, and it sort of hits the market a little bit later. And so this 99-day offset to the right, you can see the current M2 is here, but I've offset it to the right. Just want to make sure everyone understands what's going on here. And I want to go back once again and just show you guys how well it lines up. Like it comes down, M2 comes down, bottoms with the market. Both Bitcoin and the S&P got very unstable at that peak right there. It bottoms, right? They both come down together. They bottom together. They go up together, right? COVID, obviously you can't really count that. They both kind of go up and down and up together here. 2019, 2020, they both rise together. Bitcoin, once again, when it's at the end of its cycle, it peaks earlier than the S&P, which it did here. And you can see they both trend down together. They both recover together. And if you look at even like the details of this zone, right, this is the global M2, just shifted to the right by 99 days. It's just following this. It's pretty amazing. Like the structure is very similar. They both run up. They both consolidate. Then they both run up again. And even like in 2021, or 2025, sorry, like this little Christmas tree top, it lines up right with that in the middle of that consolidation. They both come down. They both bottom together. They both rebound together. And even today's bounce is lined up with Bitcoin. I mean, it's pretty amazing, right? I think Colin Talks Crypto, he's another analyst. I believe he was the one that sort of like pioneered this, or at least made it known, or I'm not really sure who discovered it originally. Could have been him, but this was brought about and it came to my attention, and there's been this discussion about how many days is the offset. And I figure that 99 days is the offset that never changes. You don't have to shift it around. If you just do 99 days, you'll realize if you really look at it closely, this is the best offset. It lines up even with today's price action, even with all these rebounds, everything, right? Is it a coincidence? I don't think so. It can't be a multi-year coincidence. Obviously not, right? So now let me just go back to the parabolic trend. Show you guys this. We were just talking about how we're following the textbook and the sell points coming up. All right, let me just move this over. Base 3, try to get this lined up. All right, base 3, we're on base 4, we're exiting base 4, and we're going towards the sell point. The global M2 with the 99-day offset, go to the daily chart, it's still going up. So remember, we're following this in a delay. And it's still up, and it shows that we're going to be going up in September. It's still moving up, right? This is a leading indicator, a true leading indicator. September still going up. Now let me remind you that the halving cycle profit model shows October going into November is the 80th week post-halving, right? 80 weeks after the halving, we top every cycle, or at least we get really bearish. And so it's going to be very interesting to see if that global M2 offset on the daily chart, 99-day offset, is it going to start to peak in October into November? And then we might actually have confirmation on the timing of the cycle. So it's like, honestly, it's such an incredible indicator. Like, it's almost too good to be true that it's so perfectly lining up with Bitcoin. But, I guess, we'll have to see. So far, so good. It's been working. And, It's just hard data. So I'm waiting for this next month. We might get the early signal that, where's the top going to be for the markets in general. What's up, guys? 1 second. Let me just check out the chat here. I've been talking for a bit. I haven't seen the chat. What are you guys talking about here? A lot of familiar faces and new people. Dude, is it too loud? Is the music too loud? I can't hear it, but some people are complaining. People are saying pump it, saying Kevin was right. Well, I mean, the parabola is still playing out, guys. 75-day offset. No, for me, I think the 99-day offset, 99 days, is consistently lining up throughout Bitcoin, like going way back in time, right? I don't think you can even really dispute it. It just seems to be perfectly aligned everywhere on the chart. You can try to look at all the little details and try to get it. You can sort of fool yourself into thinking that it might be 65 or 85 or something. But if you do 99, I'm telling you, go back in time, you'll see it lines up with so many different major market bottoms and tops. Kevin, we will meet in Valhalla. Amazing. So yeah, I mean, what do you guys think about that? Do you think we're likely to follow the global M2 money supply 99-day offset? Basically, huge run going all the way into at least September now. That's what it's showing, at least September, guys. Right, we're following this to a T. Right, and this is the chart that the bears definitely don't want to be seeing right now. I'm sure they don't like it, right? People that maybe are bearish or they're going short or they exited the market. This is a chart that doesn't really fail. And if you're a bear, this is not a nice thing to see because it shows that we're pretty much going straight up. Unless something crazy happens, right? Unless there's a nuke or there's, I don't know, whatever, another pandemic or something, right? There's always that potential. So if you guys think we're going to follow this going into October, hit 1 in the chat. And if you think no, hit 2 in the chat. Peaksy says, you mean a pump now until September with no or minimal pullbacks, question mark? Well, guys, on the day-to-day basis, the pullbacks are a lot bigger. When you're experiencing a pullback in the moment, it's a lot more, it feels bigger, right? But if you look at Bitcoin's chart and we pull up long-term chart, we go to the weekly. All this volatility that we had recently, I mean, most people, they get pretty emotional on these moves, right? These moves. Now, if you go back to something like 2020, when Bitcoin was coming up to 20,000, we had a lot of volatility, these red weeklies, right? Those weeklies, that's 17% in 1 week down from high to low, 17% down. There's a lot of chop there. Now, in hindsight, when we look at this 20,000 all-time high break, I mean, most of us just think, oh yeah, we just went straight up. That's what it seems like now. You look at this chart now, this doesn't mean anything, right? Those two red weeklies, but in the moment, it does feel like it's more. And the same thing is what we just experienced on the pullback this past week. That pullback to 100K, looking back on this, we're going to go, oh yeah, we just went straight through that, right? And so Peaksy was asking, are we going to get, are we just going to follow the M2 money supply with the 99-day offset with no minimal pullbacks, sort of just mimicking this? And, well, I don't think it's going to be I mean, obviously there will be pullbacks. There's, definitely some pullbacks in between. And you're going to feel it in the moment. Like I was just explaining, while it's happening, you're going to go, oh, it's a pullback, right? But in the hindsight, again, it's usually not much. It's really not significant, right? I mean, we were at these prices May 21st, and now we're back. And it feels like the market Bitcoin did all this stuff. It didn't really do much. right? We're just kind of hanging out at the previous all-time high. So yeah, we of course will get pullbacks. Maybe the pullbacks will be exaggerated from news or something like that, of course, right? But Bitcoin, another key thing to remember here, guys, is that in the current price action, we were just talking about like all the long-term stuff, Parabolic Trend, the M2, all that good stuff. But if you look at Bitcoin right now and the 100K level, we just retested the 100K level and held it for the first time. This was the first deliberate retest of 100K with a bounce. We never did that. I was saying this on Twitter. I was saying I don't think people realize Bitcoin just completed its most significant retest of 100K and held it. It's the first time we've had a significant 10% drop into 100K and immediately turn it into new support. Major bullish signal, 100K is the new floor. We'll see about if it's the new floor, but right now it does seem to be. So this is like our first time. I don't think people realized it the other day when this happened. It was the first time we confirmed 100K. Every other time we were just like above it, below, and we came back above it, and then we finally retest, held, bounced. Amazing, right? We finally did that, right? I mean, we're all used to the 100K level, but we finally tested it for real and held it for real with a really good vote of confidence from the bulls, like a really good snap up in price. So right now, 100K is the new floor, right? It's a previous resistance, new support. If you go to the line chart and you look at the weekly line chart, look at this, guys. We went up and we closed above the 2024 resistance line, right? The highest weekly candle close of 2025. We held it, right? That's a big deal. So this is something that a lot of people, they don't look at the line chart because candlesticks are a lot more exciting, but they're also a lot more confusing, right? Candlesticks can be like a psyop sometimes, right? These large wicks and you're like confused and all that. You can really simplify it down by just looking at the line chart. You don't have to like worry about all these wicks. And so we just had that close. That was a big one, guys. So I'm really happy to see that. Now we're sort of breaking out into new all-time highs on the line chart currently, right? If we get a weekly close above 109,000, that'll be the highest weekly close ever, right? The line chart is only showing you where the candle's closed. What's up, guys? Just checking chat. Kevin, make it go a million X. I don't know if I can do that, but I'll try. Someone's saying, do you think we can run up without Fed rate cuts? That's a great question. The M2 right now, if you look at the past cycles, what's been really important for Bitcoin cycles, let me pull up M2 Global Liquidity Index in candlestick format, right? This is without the offset, but just showing the M2 Global Liquidity as candlesticks, which you can find on TradingView. I published this indicator. Just makes it better to look at the M2. And so Bitcoin will be on the top, and we'll put the M2 lower. Well, actually, let's just go back in time. You can see that it's very important. One thing that's been really consistent is that the M2 is rising with Bitcoin, right? That's very, it's every cycle, right? And so that's one of the factors that leads me to think that we could run up even without Fed rate cuts, right? The M2 running up, market's going up, M2 running up, market's going up, and now we have the M2 currently running. And so, economics is always very complicated. Like, it's as complex as quantum physics. Honestly, when you have all the factors, it's really difficult to understand everything and to factor everything in. It could be here, it could be there. It's like quantum. Economics is not simple. So it's like, can the markets rise without Fed rate cuts? Well, they already have been, right? The S&P has been performing pretty well, right? Like it's been sort of going up more than Bitcoin in the sense that it's just been hitting new highs, like more than Bitcoin over the past, couple years. So it hasn't really stopped the S&P. Of course, we had a big scare with the tariffs and stuff, huge pullback for the S&P, but it looks like we want new all-time highs. So the two things that would allow Bitcoin to run up without Fed rate cuts is, one, if the stock market is running, then certainly Bitcoin can run. And if the M2 is continuing to rise, then Bitcoin can continue to rise as well. So if we get those two things, then maybe we will be able to see a bullish market regardless, right? And also, when we doubled the money supply after COVID, there was a huge rise in the money supply. We just moved the S&P down. Right, this is on log scale, I think. Well, regardless, huge increase in the money supply. Whenever stuff like that happens, there is a residual impact on the market. Right, there's just more supply. I mean, there's just more money, so there's a residual impact that can have a lasting effect on the market. Maybe if the Fed, ends QT, even if we don't get rate cuts, I mean, we could still be bullish, could still run up. Right, as long as M2 is going up, stock market's going up, Fed ends QT, sure. I mean, we could go up without the rate cuts. Let's see what other questions we got. Victor says, when alt season? Sometime I need Bitcoin peak in case of soon peak. Why no alt season started yet? Well, yeah, I mean, that's a great question, right? Why hasn't alt season started yet? Well, one of the reasons is that there's just less liquidity, there's less money, and so in past cycles, if you look at the altcoin space, you could borrow money for zero rates, right? And so venture capitalists could just borrow and invest and borrow and invest and not have to worry about paying back interest or whatever, and that's not available right now. It's not free money anymore, and so high risk assets have been suffering. Or I should just say lower cap assets, like the Russell 2000, right? The low cap stocks in the U.S. stock market. I mean, it went back to 2020 levels, right? Even the low cap stocks tumbled back to 2020 levels on this pullback in April. That's pretty substantial, right? I mean, that's like a full round trip. Imagine, you're holding low cap, just full round trip back to COVID, and it's just like, oh my God, right? That's similar to the altcoins. I think the altcoins are more elevated, I believe, but still the percentage moves are greater. But yeah, I mean, it's not just altcoins, guys. Low cap stocks, I mean, they had a better rebound, right? But like the low caps, the Russell had a better rebound than the alts. From the April lows there, but still just wanted to show you guys that the behavior is not just for altcoins. So, when alt season, it's just when confidence is high. So when if the S&P hits a new all-time high and Bitcoin hits a new all-time high, sentiment increases, confidence increases, and when people are confident and they're sitting on gains, they're more willing to speculate. And so I think once Bitcoin's at a new all-time high and the S&P, and the S&P is at a new all-time high, then we might start to see alts really start to move. I think that's going to be a pretty, having those two things is important. Because as long as Bitcoin is below the all-time high and the S&P is below the all-time high, then speculators are a little hesitant because they don't want to buy into a high-risk asset when the S&P is at a possible lower high, right? Like the S&P is at a possible lower high. And if it does create a lower high, that's going to impact crypto, right? And so speculators, smart money, they don't want to buy into high-risk assets when it's not a certainty that we're breaking out. What is the typical gap between Bitcoin's run-up and alt season? I think it's usually 2 months, but in this case, it's a lot longer, so far, at least. We pull up total 3, or maybe others. So here's Bitcoin and the others chart for those wondering when alt season. Let me go back to 2021. And it looks like they're doing the exact same thing, but they're not. Right, so we look at the bottom. This is others. These are low cap cryptos. And then Bitcoin is here on the top. And maybe I'll just make it more clear. BTC, others. And if I'm not mistaken, it's about 2 months of a difference. So I'd put a horizontal line on Bitcoin and a horizontal line on others. And then a vertical line on when Bitcoin broke that all-time high was right here. And it took others a little bit to catch up. It was like 1, 2, 3, 4. It's about like a month and a half. Now, of course, 2021, we had the money printing, right? I mean, a completely different environment. So it was easy to pump the market. Couple months difference for Bitcoin versus alts. This cycle, currently it's a very different situation, right? So you can't really, it's like you can't really just go based on the previous cycle. How long did it take the alts to catch up to Bitcoin? It's not really relevant anymore because it's already so disjointed. You look at others on the bottom, low cap alts, and then Bitcoin. It's already just so we failed to follow Bitcoin in the same way that we followed the last cycle. So it's just, at this point, it's just going to take a lot more, I think, to get the alts to run. And again, it's going to take S&P new all-time highs and Bitcoin new all-time highs together. And then I think the sentiment will be good enough for things to, for people to speculate on the altcoins. Most of them are at a really good deal too, right? So I think that's another reason why alts might actually be able to run is because they're just so low. And like I think most people, once most people are confident enough to get into the altcoins, they're going to look at the price, they're going to look at the chart and the value, and they're going to, oh, this is pretty cheap. Right? I think money's probably going to come in just based on how low they all are. Worldview says smash the like. Definitely smash the like, guys. Yeah, and so Street Styles is saying the Fed raised rates 3 times during the 2017 bull market. Right. So that's another thing that a lot of people don't understand. Once again, economics is extremely complex. It's like quantum physics. There's a lot of like moving parts. It could be here, it could be there. Is it happening because of this or because of that? You don't really know, right? You can take your guess, but there's very few people in the world that really understand it. And if you look at 2017, yeah, the Fed was raising rates, right? And a lot of people think, oh, rates up, that's bad. But certainly wasn't in 2017. But, why is that, though? Why is it that the Fed could raise rates in 2017 the whole time and we were bullish? Well, there's plenty of factors. One of them was that the economy was, first of all, the world was stable. We had globalization, cooperation. We didn't have these crazy wars. We didn't have sanctions and like what we have now. So we were still like in a stage of globalizing. And we had a tech boom that was still growing into 2017, right, for post-2008. Tech boom was still, taking effect. You had even like the post-2008 bailouts, even that was still affecting the market in like 2014, 15, 16, maybe even 17, right? All that money, all the stimulus was still affecting the market in a positive manner, I think. I think the Fed balance sheet was up and then flat in 2017, but the Fed balance sheet, let's pull this up if we can. I have to go to another chart. The Fed balance sheet had come up, and I think that had a residual impact on the markets. And another thing is, the Fed was extremely predictable in 2017, right? The Fed said what they were going to do, and then they did what they said they were going to do, and everyone knew what the Fed was about to do, and they did what they said they were going to do. And that's very important. There was no surprise. So the Fed was able to raise rates, and markets knew it was coming. They understood what was happening, right? So now, in the current era, I mean, we had the highest rate hike in, I mean, it was the highest velocity, the highest rate hike velocity in U.S. history. So that was unpredictable. That was a surprise for people. And the Fed has been kind of unpredictable, sort of like people aren't sure. Everyone's like, you know, staring at every Fed meeting. Everyone cares about the Fed now. Back then, people didn't care as much. But now, why is it that we all care about the Fed so much more? It's because we're like uncertain. We're not sure. So uncertainty from the Fed is not good for markets. So in 2017, there was certainty, and rates going up was perfectly fine. No problem. So that's like, I mean, that's why it's so complex. Like, it's not just about rates up or down. It's about like expectations and just like, it's a whole mess of things, right? We got a lot of questions in here. Now that I'm answering questions, there's a lot more questions coming in. I definitely can't get to all of them. But what's up, guys? Yeah, I mean, I'm live for the first time in quite a while. Definitely smash the like button and subscribe if you're new. Going to try to maybe get the live streams going again on this channel, which, you know, for a while I wasn't really streaming much. But if you've been a viewer since 2017, I mean, well, I guess 2018, you guys know that I got started on YouTube really by streaming. Steve Hubes is saying, line up Bitcoin with the M2 offset, like precisely, to see. You know, I don't know if that's exactly what you would want to do, though. I don't think that's exactly how you would want to go about it to get your target. You're saying, like, I know what you mean. You're saying, like, get it so that the low and the high are like perfect, and then you get your price target by just putting your mouse here and you're, oh, 160,000, right? I'm not sure if because actually I know I can explain why that doesn't work, because you can't have this perfectly fit throughout all of history. At some point there's a deviation, right? It's like, okay, if I want this portion to fit on the chart, then I have to expand it and get it like this, and then it doesn't really fit this area and it doesn't fit that area anymore. So you can't really do that. It doesn't make sense. But it's good for timing, though. I mean, like, if this follows, right? If we follow M2 money supply with a 99-day offset, that's personally what I've determined is the best offset. You know, I mean, that means at least September. So it doesn't even matter. You don't need to know what the price. Okay, if you're gonna analyze it like this, you don't need to know the price target. You don't need to. You just need to time it out. It's just about timing at this point. Right, it's a 99-day offset. So what is actually important about this? It's the time. It's not the price, right? This isn't to give you a price target. That's not what this is for. It's a time target. Wherever you start to see this curl over, you know, that's probably where your peak is going to come in. So far, it hasn't showed up yet. You go back in time again. You know, you go throughout history. It really lines up very well with most of these cycles. There's a lot of interesting details throughout. And I know a lot of people have been offsetting it for recency, but I think 99 days, if you really pay attention to the details, is actually the best, because it's all the pivot points line up. You know, this low, this high. Bitcoin, it doesn't have to follow. I mean, again, Bitcoin, the S&P, once again, ran again with the M2 on this. So S&P and Bitcoin both got unstable right here when the M2 99-day offset peaked. both of them started to get choppy. But then the M2 runs again, and the S&P hit a slightly new all-time high. Bitcoin didn't. That doesn't mean that the 99-day offset is wrong. It just means that Bitcoin wasn't being speculated on as much after that point, right? And it's very, very evident. If you look at the S&P, if you pull up the S&P, you go to like the weekly chart, go to 2017. You know, most people will look at this and they go, "Oh, see, they're not correlated," right? But there's a lot of interesting details about this comparison. I've studied this like a lot, and it actually, you know, the fact that it looks different, there's actually details in there that kind of like prove the correlation where they both start to get unstable at a similar point. Bitcoin always a little bit earlier, usually in every cycle, it tops a little bit earlier, but they both get unstable. And when the stock market is unstable, that's not good for crypto. Yeah, the S&P goes to slightly new all-time high, but then once the moment that it reverses, Bitcoin just tanks with it, and then they both hit a low at the same time. And the M2 Global Liquidity Index with a 99-day offset, I have to go back to the 99, or I have to go back to the daily, I mean. Is this lined up? Yeah, okay. So Bitcoin 2017, Bitcoin on the top, S&P on the bottom. So obviously there's a difference in the exact timing of the top, but this peak lines up with Bitcoin pretty precisely, right? And they both dip, right? They both have this rebound. The S&P is trickling up, and as long as the S&P is maintaining this uptrend, Bitcoin is able to hold 6K. That's where the correlation is in effect. It's there because Bitcoin's holding support while the S&P is staying, you know, in an uptrend. The moment it starts to get unstable again, Bitcoin loses its footing big time and drops from 6K to 3K right alongside the S&P, right? And the M2 is trickling down right into this point, right? It's not perfect, I guess, but it's pretty aligned. And I think the 99-day offset has the most, I guess, it lines up the most throughout history, I would say. Now there's just way too much stuff on this chart. I don't think there's necessarily going to be a perfect number, but interesting nonetheless. Bitcoin now above 100. We've been talking a lot of like long-term stuff. Bitcoin maintaining this pump, hanging out at 110,000. Pretty great to see. Flat Smack saying, when Ethereum season? Jesus says, Kev, can you check Bitcoin dominance? Jesus, I remember you. Yeah, you're a moderator. You're literally a moderator. You've been watching my streams for many years, so I appreciate it. If there's ever scammers in the chat, I guess you have the power to take them out. I guess you're the warrior or the knight of the chat room now. I don't even remember who my mods are at this point, but you're one of them. No, Matt says I lulled at Eth season. No, I didn't. I'm waiting for Eth season too. I was just looking at the chat, guys. Ethereum season seems to be, well, kind of starting, right? I mean, Ethereum's back up pretty. This is a pretty good start to the week here. I mean, it's Monday. This could be a good weekly, guys, for Ethereum. And another thing to keep in mind is that since April, Ethereum is up double as much as Bitcoin. Ethereum is up nearly 95% since the low of April. 95%, and Bitcoin is up 48%. So right now, if you just remove the past, this pullback, and you just start the clock in April, you're doing twice as good by, if you bought Ethereum at these lows, you're doing twice as good right now than holding Bitcoin. So Ethereum season, I don't know, has it already started? I would say probably. I think Ethereum season has already started. It's already outperforming Bitcoin. We went from completely decoupling from Bitcoin, Ethereum going the opposite direction, to then being twice the performance as Bitcoin. So Ethereum season has already started, in my opinion, and it's probably going to continue. You know, it only took us about 1, 2, 3 weeks to get halfway back up this pullback. Right? Think about this, guys. From like this area, it was 1, 2, 3 weeks, and we reclaimed half of this pullback. What's going to happen in 1, 2, 3 weeks? I mean, listen, anything's possible, right? Things can get pretty bullish pretty fast in this market. So, you know, if Ethereum just repeated these 3 weeks where we are now, we'd be like breaking 4K. Not to get people too excited, though maybe you need the emotional support at the moment. But again, if you just take these through, I'm just going to draw this out real quick. Right, and I just put that where we are. All we need to do is just repeat those 3 weeks. Here we are, we're at 4K, and then we have until October to do whatever. Right, we have the 80 weeks post-halving. The halving cycle profit model works for altcoins as well. Right, have Bitcoin halving 80 weeks later, Ethereum tops. 2020 Bitcoin halving 80 weeks later, Ethereum tops. Bitcoin halving cycle profit. It's just 80 weeks post-halving. And so Ethereum has 40 weeks. Wait, my math is not mathing. 21 weeks, something like that. 20 weeks to pull off a major move of some kind. So if we got a quick recovery towards 4,000, you know, consolidate, do that again. Yeah, I mean, I don't know, 7K Ethereum or something. You know, at the end of things usually get more bullish than you think. At the end of the cycle, things usually get really exciting. Usually, right? That's the key word. So you could see something like that happen. I mean, Ethereum's probably not going to do the same type of epic. Obviously, it's kind of been set back quite a bit. That's a big setback. Now, if you were to just remove this pullback and just put it back on the chart starting here, yeah, then you might have seen, you know, if we didn't have this dump is what I'm saying. Yeah, then we might have seen some better prices, but I really wouldn't be surprised to see something like this, which I know sounds just crazy. People are like, "Oh my god. Oh, Kevin's a moon boy. Oh man, like how could he say this? Ethereum sucks." Look, I get it. It's Ethereum has sucked really bad this cycle. But you know, I'm not going to discount it. I'm not going to discount Ethereum having a pretty good return, especially if there is an alt season. Ethereum's going to rip. It's going to be undervalued, just going to rip. It's going to be, a lot of people are going to be buying in and not selling most likely. Or there's going to be a lot of accumulation on the way up. Kevin live is bullish AF. Would this really surprise you? I know that it looks, I mean, I'm just drawing a straight line up basically, in a sense, but does that really seem that crazy? Does it really seem that crazy of an idea, guys? Is this unbelievable? Like 7K or something like that? I don't think so. That's like really, that's kind of just like barely a new all-time high almost, and then it comes back down. Right? So all the Ethereum haters who are angry at me saying this, it's like, well, I mean, it's not, it's just a little bit above the previous all-time high, maybe a couple weeks above, and then pulls back again. I don't think that's crazy at all. I think that's actually quite possible, quite likely, probably happens. I don't see why not. Not bullish enough. I get that all the time. You know, again, my predictions can always change, guys. They can always change. If Ethereum had, here, I'll just draw something funny or fun for you guys. If Ethereum had a weekly candle that was like this, like one weekly, which I'm not expecting, but I'm saying it's just an extreme example. If Ethereum had a weekly that looked like this, then I would change my outlook. And then I'd be like, oh, wait a minute. Okay, we're making really good progress. We could go higher than, maybe 7, which is really just right here. Right, but I don't think it's, so if things, depends on what happens. If we don't pump at all, right, if we just sort of sit here for another month or two, then I'll say, you know what, maybe we don't even go to 7K. Maybe we barely go above 4. So it depends on how much progress we actually make moving forward. Guys, if you're just coming in the stream, definitely smash the like and subscribe. Committed to Success says, why are you still convinced the 4-year cycle is still on? It's broken. Our upcoming bull run will go past October. You know, I've heard a lot of people say that, and I'm wondering, how is it broken? I'm really confused about that notion that it's broken. Let me just pull up presidential elections, names, and dates. And the 4-year cycle is really just an election cycle. It's a U.S. election cycle, right? Barack Obama, 2012, whatever, bull market. Donald Trump, first term, bull market. Going into Joe Biden, the election there, bull market. Donald Trump, going into it, huge pump, we pulled back and we're pumping again, bull market, right? So it's all the same. I don't know why people are saying this, right? Yeah, okay, we had a pullback. Does that mean that this concept is broken? Not at all. I mean, we had it here too, kind of like Joe Biden gets inaugurated, right? You have the election inauguration, and 1, 2, 3 weeks later, 58K. We pretty much just stop moving at that point, and then we dump. And for this cycle, it was kind of similar. We pump into the inauguration, and then we dump, then we pump again. I don't understand why people are saying the 4-year cycle is broken. Maybe I just haven't heard the right explanation, but we are doing the same thing as always. U.S. election, pump. That's just what I see, right? So this is the S&P pumping through the election. We had a bit of a tariff scare. We have elevated rate environment. None of these past presidents had this type of environment. So there's more volatility right now, but still, if the S&P breaks all-time highs, ultimately, just tune out the noise, open up the monthly line chart. Monthly line chart, there's barely a pullback here. It's just like going up, just like the other elections, going up, going up, going up. I don't understand what people are talking about. Why is the 4-year cycle broken? I don't get it. The altcoins make it feel broken. Yeah, okay. I mean, I see, yeah, low cap assets, high risk assets, they're not performing very well, so it feels broken. But that's not enough, right? The S&P, Bitcoin, the majors are following the 4-year cycle. Again, I want one of you guys to explain, why is the 4-year cycle broken? We're actually just doing the same thing. Can someone explain it? And this is also dangerous, guys. This is very dangerous, actually. This is yet another narrative to make you not sell when you should sell. People are saying, "Oh, 4-year cycle is broken. We're going to just pump forever," or "We're going to pump. We're just going to keep going up." I mean, is that the next narrative to make you not take profit? To make you hold your bags? Seems like it. I don't think anyone's actually explained it yet, but the argument is that big money has taken over. Guys, the 4-year cycle is not a Bitcoin thing. It's a U.S. election thing. It's a U.S. election phenomenon. Right? I think Satoshi was just very smart in the timing of the release for Bitcoin, because the Bitcoin halving is always lining up. Here, wait a minute. Get the halvings here and the elections. Is this a coincidence, guys? Like the halving and the 2012 election inauguration, the halving, the 2016 election inauguration, the halving, the election inauguration. Is that a coincidence, or is this just strategic timing? I'll let you decide. But I think that Satoshi, whether it's a person or a group, whatever it is, I think it was just the understanding that the U.S. election usually brings about these uptrends, these waves of enthusiasm, usually come up into the election and after the election for about a year or so, or a year or two. And there is no difference between Bitcoin and the stock market in the 4-year cycle. It's not a Bitcoin thing, guys. Bitcoin is correlated to the stock market. Bitcoin isn't bullish when the S&P is bearish. So the 4-year cycle is simply the U.S. election. And that isn't going away unless America goes away, right? So you have to think about, it's just a renewal of sentiment every election. People bet on the new possibilities and the new things that are coming. And so there's this wave of enthusiasm every election. And it's still here. Look at the Bitcoin monthly chart. Check this out, right? Why does this really look different than any of these other ones? No. We're following it. 4-year cycle is absolutely in play right now. I'm not sure if I missed the explanation, guys. I'm losing track here. But yeah, I guess the idea of a 4-year cycle being over, the benefit for people is so that they can be bullish for longer, so that they can just believe that the cycle will go longer and that they don't have to sell or something. I don't know. That's what it seems to be, just a hopium type of thing. I'm not saying it's not possible. I mean, maybe things have changed enough that things are bullish for longer. Basically, it's like election halving, and then in the first half of time before the next halving, right, within the first half of these two zones, let's just split it up into, two halves like this, right? The top comes in the first half there. And then if you do it again here, election, halving, the top comes in the first half. Do it again. Right, it just goes along with halving cycle profit. But top comes in first half of the term. Usually before the 50% mark of the next halving, essentially. So if we take this, and we move it onto where we are now, we place this over here. This means that the top would likely be coming in before April of next year at the maximum, because that's right by the 50% mark. But it's almost always somewhere before the 50% mark. It's almost 25% of the way to the next halving. You could say 25 to 35%, 40%, 25 to 40% of the way into the next halving. So that puts us, you could just say end of year, right? It doesn't have to be October. That's just my estimate based on previous cycle timing and the M2 Global Liquidity Index timing as well. It lands you at around end of year. Or actually, the monthly is not right on this halving cycle profit. It's not lined up right. It's supposed to be October. But you guys get the point. Blue Green says, only way to know if the 4-year cycle is broken is to look back next year and see if it's broken. Until then, the 4-year cycle is the standard. Yeah, guys, it's just I agree. It's just the U.S. election, and that's it. People think that the 4-year cycle is this magical cycle. It's just based on the U.S. election, guys. Like they just think that I don't even know how people view it, but they never really talk about how it's just lining up with U.S. election. Let's see. Do I check other projects? You know the problem with me looking at altcoin charts is that on a live stream is that then the chat is just flooded with, hey Kev, look at this coin, and then there's just 10,000 coins that I have to look at, and it's like, no, not doing that. I don't think I want to do that. I mean, obviously we pulled up Ethereum, which is still the king of alts. Looking at DeFi Llama, and you look at chains, go to chains, you see that Ethereum has 55% of the total value locked across all of crypto. Solana, even though it had more popularity recently, is just a tiny slice of Ethereum. So Ethereum is still the sleeping giant. It's still the king of alts. It's going to have its return, right? If this pie was decreasing, which it actually has increased in the past month or two, I think, if I remember correctly, it was more close to 50%, and now it's 55. So Ethereum, or 55%, now it's 63 billion. Ethereum's TVL is literally increasing over the past couple months. So if it was the other way around, and Solana was increasing and Ethereum was decreasing, that would be a bit concerning. But it's increasing. I guess that's since the April low. And in comparison to the other coins, since the April low, it has increased, at least from my memory, it has gained a slice of this pie. Combined all other chains still doesn't compare. Ethereum's still bigger. That's how you could look at it. So I'm not really too worried about Ethereum in the long term. I think it's going to be, it's not dying. It's not dead. Ethereum is the Bitcoin of smart contracts. You know, Bitcoin is not the fastest and most efficient form of money, right? It's pretty slow. I mean, it's, obviously faster than something like gold, right? But it's not very efficient, but it's still the most valued asset for obvious reasons. I don't think I have to go over why we value Bitcoin. Ethereum is kind of like that for DeFi and smart contracts. It may not be the most efficient, but I think it is going to be a very long-term asset that will exist for a very, as long as Bitcoin, and I think Ethereum is just going to be around for the far future. And also, I mean, you got all these layers. Base chain, right? Coinbase chain is Ethereum layer. I mean, there's all this infrastructure still built around Ethereum. Ethereum is the Bitcoin of smart contracts, and it's going to do just fine. It just had a bad cycle. It's like Ethereum was down, and this market kicked it while it was down, basically, and it made it worse. But I think it's going to be all right. But no, I don't want to bring up other alts because then all I'm going to be doing is looking at all these random altcoins, guys. I don't want to do that. I will bring up the others chart. This is the low cap altcoin chart. And this is my projection right now, my expectation currently for the rest of the cycle until something changes. The others chart, I think, by the time July comes around, maybe end of July, we might be at 550 billion with a significant pullback. And if we're lucky, a major blow-off run into October or end of year towards about $1 trillion for the others low cap alts. This is the index, right? It's not as bullish as previous cycles, right? This target is not as high as previous cycles, but that's just how it is. We're just not as bullish right now, and we only have so much time in each cycle to play out the cycle. What's more important than price targets is time targets. They are more important Because, I mean, it's really simple, guys. Like, once again, I mean, okay, you can make the argument that the 4-year cycle's over. I don't think so. Every time we have a cycle, 80 weeks after the halving, the global liquidity, the M2 begins to come down at some point. You know, it's 80 weeks after the halving, the cycle starts, we enter the bear market. So, you know, the time so like you could have had whatever price target, you could have tried your best in 2017 and 2021 to predict the right price target. But if you just counted 80 weeks post halving, you would have sold the top every time. It shows you that the 4-year cycle is very important, and when you sell is more important than at what price. Because the price could be here or there, but the timing seems to be really, really consistent, at least so far. Now, that may change. You know, it could change, but, you know, maybe we extend, you know, people are talking about, I'll just entertain it. Maybe the cycle extends into 2026 a little bit more. Like maybe we run until April of 2026 or something. But regardless, it's more about, you know, having time targets. I think that basically the window of opportunity is going to be something like October to end of year for the right profit zone. October is an area of interest for sure, just based off of previous cycles. And, you know, a lot of people will go, oh, but this cycle isn't the same. This cycle is different. Is it though? Look at this chart. Look at this chart. I want to show you guys something. We have the election, right? We're going into the 40th week. Let me pull up these labels. The timing is actually so similar. It's crazy. Let me pull up the profit endpoint. So you have the election on each of these initial pumps up for the new all-time high break. Election both times. And then you get to the 40th week, the beginning of this green bar, and then you dump into this green box, which is just, you know, the final stretch of the halving cycle profit model. And then you bounce into the 80th week. Look at what we just did. Halving, election, pump, dump, just like this dump. It's the same thing. It's literally the same thing. Dump, pump, and dump, pump. And it's like, I don't know what people are looking at. I'm looking at the chart. I'm like, this is actually like a spitting image. Am I the only one that sees this? I can't be the only one. Am I going nuts, guys? Joko has an interesting point. Take profit on every rate cut. I mean, I'm not sure how that would really play out. I mean, I guess I suppose that might actually be a good idea, to be honest. But it depends on when the Fed actually starts to do that, though. Have you ever tried to swap dump into pump in the previous double peak? I'm not sure what you mean by that. I think I missed a lot of the chat, though. Definitely smash the like. I need to get my setup better because I'm looking at the other screen. I need to have, like, I should probably put it over here if I'm going live, so I'm not looking away from the camera. But this is just the setup I have right now. I haven't gone live in quite a while. But, you know, again, if we're going to be breaking out here, you know, pumping new all-time highs, I'll probably start going live more. Eduardo says, is your indicator on the TradingView platform? It is. What the halving cycle profit model. Now, keep in mind, there's some issues with it. Like on the monthly chart, it's not lined up properly. It's not landing on the 80th week. I don't know why, but it's the model is based on weeks. Like these labels, it says 80 weeks ago. Like the halving, like the hammer to represent miners, the halving, right? 80 weeks ago. So it's a weekly chart model. And if you just pull it up on the weekly chart, should be fine. And it'll work on you can put it on the S&P if you want. Not that you should. I'm just saying you could put it on like Ethereum, you know, lands you right there, lands you at the top each cycle so far. Again, time targets are way more important than price targets, and that's the secret that nobody tells you. Because your price targets will not be correct. No one's getting that right. No one's going to get it right. But you could have just sold based on time, you know, boom. The Chains link says that he won't sell a single Bitcoin, but wants the alts to dump 100%. Yeah, I mean, I'm not saying you should. I'm not telling you what to do. I think Bitcoin is a great thing to hold for a lifetime, right? I mean, the richest people never sell, essentially. Like the ultra rich or just the very, very wealthy, they just buy stocks. They just buy the majors, they buy index funds, whatever, and they just never sell, ever. They don't sell a single share. They just borrow against it. That way it's just keeping up with inflation, increasing over time. And, you know, it's kind of a retail thing to be like trying to pick the top and all this stuff. That's not what the wealthiest people do. They create the top if they're gonna figure out a top. It's chasing tops and chasing bottoms and buying and selling and going in and going out. I mean, I understand if you're a trader, if you're literally a professional trader, that's a different thing. But I'm talking about the vast majority of people that are just so concerned with all of this. Most of them would be better off just holding, to be quite honest. What else do we got here? Sorry, I'm pretty. I didn't really have much. I don't have like a script. I actually have never had a script for a live stream or a video. By the way, I don't use that. So today's the first time I went live in a long time, and I'm kind of just, you know, I've said what I wanted to say. Getting back in the swing of it. Probably going to be doing more lives, and I need to get my setup right so that the chat is like here, not over here. But I was having an issue with my video editor. I was going to post a video, couldn't do it. And so I was just like, all right, we're just going to go live. Sorry, I'm not, I'm just reading chat real quick. But anyway, I mean, I don't really have to stream for much longer. I think I've said what I wanted to say. Don't need to drag it out. We'll be doing more lives, guys. Bitcoin in the short term here, 30-minute chart. Epic bounce, maintaining these price levels, not pulling back yet. That's a lot of strength there. No immediate rejection. Bitcoin probably won't give people a second chance to buy, right? We got that panic, that April, that March, that tariff panic, all the way into April. Whoever had weak hands left the market, and Bitcoin won't give them a second chance. It'll punish them now until the end of the cycle, I think. I don't think this is coming back until the bear market, these levels here, to be quite honest. But we'll see. So I think we're probably going to end up breaking all-time highs soon. And now, of course, major disclaimer there on what I just said. The S&P is so important for Bitcoin. It is so underestimated how important it is to understand the correlation between Bitcoin and the stock market and how relevant it really is. There are times where there's a decoupling. There are days and weeks where Bitcoin might do something a little different. It might bottom a little earlier than the S&P. It might pump a little earlier than the S&P. It might, whatever. It'll do some weekend price action. It'll do some after hours price action. Bitcoin has bigger percentage gains, all that stuff. But the weekly direction of the S&P is so important. It's not perfect all the time, right? Like, it's not like it's an exact copy of Bitcoin. Obviously not. But the general direction of the S&P is so important to know, right? And so I mean, honestly, whenever I see an analyst that's, like bullish on the stock market and bearish on Bitcoin, I question their expertise because I'm like, have you not looked at the correlation? Like, it's at least in the long term, right? In the long term, short term, anything can happen in the short term, but you can't really be long term bearish or long term bullish on Bitcoin and then the opposite on the stock market. It doesn't make any sense. Really doesn't make any sense. But the general weekly direction with slight differences here and there for Bitcoin, the S&P. People will point out like little things that happen in between to disprove the idea that they're correlated. But the weekly direction is very, very important. Like this, I mean, can you tell me which one's which? They're both on top of each other. This is 2022, and then 2023 into where we are now, right? They both dip, all that. This is one of the biggest anomalies in crypto history in terms of the correlation. One was Mt. Gox, Bitcoin topped earlier. Fundamental difference. And this was also another fundamental difference. China, Bitcoin banned. Tesla stopped accepting Bitcoin, blah, blah, blah. That caused that fear, that dump. This is an anomaly for fundamental reasons. And there are always fundamental differences. Like the banking debacle, Bitcoin pumped against the S&P when it was dumping. So I'm not saying they can't. There's always going to be little decouplings, stuff like that, right? I think which week was it? The banking debacle, I think it was like right here, Silicon Valley Bank. There was a moment inside of that weekly candle there. Oh, you know what? It was actually this rebound. It started here. You had the banking collapse, S&P dumps, Bitcoin rebounds on that dump, pumps, and then the S&P follows right after. So it's not really that big of a difference. People will always scream decoupling right then and there. And then you have some more sideways action than the S&P, right? But generally speaking, the alignment is very important for the weekly direction with slight differences in between, right? I forget why I was even saying that. Oh yeah, it's because, whatever the S&P does here, if the S&P, I guess I can't say whatever it does here. There's always a chance that the S&P could just be stable here and Bitcoin pumps. Right? If the stock market's stable, Bitcoin can be bullish. But it's when the S&P gets bearish for a fundamental reason that Bitcoin will snap into correlation. So what we want to see is the S&P just clear this all-time high, and then we're off to the races. We're really close. I mean, the S&P is right there. All it takes is one good day, one good week, and we're at a new all-time high for the S&P. Could be this week, could be next week. And then Bitcoin will be off, right? If the S&P is stable and or bullish, Bitcoin can kind of just do whatever it wants, right? But the weekly direction is super important. So S&P, I don't like where the S&P is right here because Bitcoin's like basically at new all-time high zone, and the S&P is kind of like just below it. And I would rather have the S&P lead us because the Bitcoin is highly correlated. And because it's above its all-time high, while the S&P is slightly below, and the S&P is really the leading, it's like the North Star, it's a little bit worrisome because I don't want to see a lower high come in, basically. It just puts me on edge a little bit to see the S&P down here while the Bitcoin's at a new high. Because this was actually the first time, I think, ever that Bitcoin reached the new all-time high before the S&P. Right? That's another way to prove the correlation, is that Bitcoin's all-time high breaks don't happen before the S&P. The S&P gives the green light, Bitcoin follows. I guess you could say maybe since we did it this time, Bitcoin could be maturing and all that. Maybe, you know what, maybe it'll get less correlated over time. I would love to see that. But yeah, so I want to see the S&P make this move. Joko is saying, does price go down after rate cuts? So no, basically, if you look at all the areas where the Fed cut rates in the past, let's pull this up. effective federal funds rate, it was always coming in alongside a crisis. So the Fed's cutting rates into a crisis. 2001, the 2001 dot-com bubble, that didn't happen because the Fed was cutting rates. The Fed is cutting rates to release pressure off the economy because there's an issue. The rate cuts are usually in response to crises. 2008, this is more in response to the crisis, at least from my understanding. Right? Again, not an expert on this, right? But, COVID, the Fed was actually cutting rates. The market was mooning, actually, into that rate cut. And then the unexpected happens. Right? You basically have to separate this moment in time right there, like this portion of the chart. You got to separate this left side from this right side because it was like black swan surprise. But the rate cut in this moment, July 2019, September 2019, was actually pumping the market. And then COVID happens. So if the economy is healthy and rates are getting cut, that's actually very bullish. Or it could be, I should say. It could be bullish. But usually what's happening is the Fed's cutting rates because there's a problem. So right now the Fed doesn't have to do anything, really. The economy is doing fine. There's no crisis. This is something that Matthew Hyland, he's on Twitter. He's one of my friends. He's an analyst. Matthew Hyland discussed his opinion on basically like the Fed has all this ammo. Like they have all these tools in their tool belt. They could do QE. They could print money. They could cut rates. They have all the ammo around their belt. The Fed is in a strong position. The economy is doing good. They have all that ammo. They can respond with all of those tools. If the Fed sort of just spent all their ammo right now, like cut rates, print, this, that, and that, without a crisis, then they got no ammo left and we're screwed if there's a problem. They just released all their ammo and they can't do anything anymore. So the Fed, Jerome Powell is actually pretty smart. Like, I know it's not great that the rates are still high or whatever, and I would prefer markets to just be bullish or whatever. But Powell is actually pretty tactical in this choice. Like, he's just holding on to his ammo, and let's say we enter a crisis soon for whatever reason. We would be thanking Powell at the end of the day, like, yo, great job. Like, thanks for being prepared, essentially. Right? But, that's just how I see it. I was going to say something else, but I forget. SZA says, Kevin, subscriber here. What's up? Guys, definitely like the stream if you're new. Or not if you're new. Subscribe if you're new. Like the stream if you're watching. Lucas says, what will be the best strategy to buy Bitcoin after the bull run? It's interesting. If you go to the long-term Bitcoin chart and then you pull up the Bitcoin halving cycle profit model, and let me remove these drawings and then pull up the settings for this. About 135 weeks after the halving, on average, is where we're bottoming. And then you DCA into the first uptrend. 2016 halving, 135 weeks after the halving. It's the same number, 135 weeks. And then you DCA into the first uptrend. Or you could DCA earlier. DCAing, you don't have to be too concerned about the exact timing. That's kind of the point, right? 135 weeks after the 2020 halving. Look, it's the bottom. Look, 100. So, again, time targets are so much more important than price targets. Your price targets don't matter. The timing is everything. Now, people always say, oh, you can't time the market. Well, at least in this case, you kind of have to try, right? Unless you're just going to hold forever, then sure, then you don't have to time it. You can just hold, right? But 2012 halving, 80 weeks after, huge bear market starts, 135 weeks after that halving, it's the bottom. 2016 halving, 80 weeks later, huge bear market comes in, 135 weeks later, it's the bottom. 2020 halving, 80 weeks later, huge bear market comes in, 135 weeks later, it's the bottom. What? What? just like, okay, that's crazy, right? The Bitcoin halving cycle profit on TradingView. Now, I'm expecting that at some point this model will break. All models break eventually. Eventually, this model will break. Or it'll just become slightly irrelevant as time goes on, as things shift here and there. Or maybe I have to adjust this at some point. I don't know. But right now we're on track. We're on track, guys. And it's, you know, there's no problem with what Bitcoin's doing. This dip was exactly, almost, it's not exact, but it's close to the same timing of this one in the last cycle. Very close. Eugene Sky says Bitcoin is now an institutional asset. It is, but it's also still Bitcoin. It's also still Bitcoin. I mean, Bitcoin's characteristics have shifted a little bit this cycle. It's been a little bit more choppy. You could attribute that to higher market cap. There's definitely different players involved, and so the price movements are a little different. I mean, if you were around in 2017, 2018, 2019, 2020, you know, the way Bitcoin moved was so different. Well, I should say a lot different. Like the everyday price action was a lot different, but still similar. There was like a little bit of a flare to it back then, more of a flare. But for a Wall Street trader, Bitcoin still has a major flare to it, right? It's still, I mean, literally, it went from 15K to 110K. I mean, that's insane, right? For traditional markets. Bitcoin's still the fastest horse. All right, guys, I think that's it for today's stream. I know there's a lot of questions in there. But yeah, definitely smash like, subscribe if you're new. And I'm going to get my live stream set up a little bit better so I don't have to look over here to see the chat. I just couldn't post a video today, so I went live instead. Don't really have it set up at the moment, but I'll get it set up for next time, and I'll see you guys in the next video. I don't know how to end the stream. Where's my, oh, there it is. Cool.